Bloomberg Audio Studios.
Podcasts, radio, news.
From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York, this is Bloomberg Technology. Let us get straight to the breaking geopolitical news and its market impact. Now, the US has indications that Iran is preparing to imminently launch a ballistic missile attack against Israel. It's all according to a senior White House official. Markets, well, seeking out safety. We're down on the S&P 500 in more than a percentage point. It was a swift move from the headline. But notably, this is only the biggest sell-off since September the 6th, not even a month. NASDAQ 100, similar moves to the downside. We're seeing money move into oil up 3.5%, worries about the supply side there, and a 10-year yield that crashes down some 6 basis points. This, of course, as we see a search for safety. But we want to bring you the context. Bloomberg's Kayleigh Lyons on the latest news. We are very pleased to have you in New York. We understand that the US is actively supporting preparations to defend Israel against the possible attack.
Yeah, that's right, Caroline. And I would remind everyone that the US already has had to act in tandem with Israel and other allies, including the UK and Jordan, about 6 months ago when Iran launched hundreds of missiles and drones at Israel in an attack back in April. Largely those were intercepted as it was telegraphed beforehand that they were coming. Now the US intelligence does suggest that Iran may be preparing to do something similar as it retaliates against Israel. This is retaliation that we have been expecting for about 2 months now, since Israel took out, although it did not claim credit for it, Hamas's political leader in Tehran over the summer. Iran has yet to hit back over that, and there is potentially more for them to retaliate against now after Israel just in the last week was able to kill the leader of Hamas, Hassan Nasrallah, of course, in Lebanon, and has just in the last 24 hours launched a ground incursion into Lebanon and what they're calling targeted operations. But that is the kind of behavior that the U.S. and others have been warning could be seen as escalatory, as everyone is trying to fend off a wider regional war in the Middle East. But still, Israel is moving into Lebanon as we speak. And Hezbollah, of course, one of the most powerful, if not the most powerful Iranian proxy, has been seriously weakened by Israeli activity over the last several weeks, not just with the killing of Nasrallah, but also of a number of senior commanders, the explosions of pagers and walkie-talkies in recent weeks that has limited their ability to communicate. And a weakened Hezbollah could be seen potentially as a weakened Iran, and Iran could be wanting to show here a force of strength in the region, even if it does have the potential to draw others more directly into this conflict, including the United States, which just yesterday said they're sending thousands of more troops and assets into the region.
You give us the context of the U.S. response, Kayleigh. All of this comes after, of course, what Iran did in April. This isn't the first time that we've seen them respond, but at that time it almost felt as though it wasn't as aggressive as it could have been. What are you getting in terms of signals now?
Yeah, Caroline, that's absolutely right. It was explained to me back in April that Iran sent its slowest drones first. Essentially, they were trying to signal that this attack was coming, and of course that enabled the attack to largely be intercepted. It resulted in very little damage to Israeli infrastructure. Only one person was ultimately killed. So that was escalation that actually was more de-escalatory than it was escalatory. Israel hit back in a relatively mild manner, and no tensions were continuing to climb from there at that point. The question is going to be the size and scope of Iran's response this time around. After that original killing of the Hamas political leader in Tehran earlier this summer, many Middle East experts I was speaking with were warning that Iran might actually want to land a punch this time in a way that it didn't back in April due to that interception of everything pretty much that they sent over. So it's going to be a question of how limited in scope Iran chooses to be here, as Iran may not have direct incentive to escalate this war further, put its own self into this conflict rather than doing the fighting through its proxies, as we've been seeing them do since October 7th, which is, of course, now almost a full year ago. And, of course, not wanting to draw more direct conflict with the United States either, because when American troops get involved, Caroline, that is where things get a whole lot trickier.
Bloomberg's Kayleigh Lyons, thank you so much for being here. Meanwhile, we want to get yet more insight for you now. Bloomberg's Dan Williams is on the ground. He is Israel's northern command, close to the Lebanese border. Now, we know that the imminent threat of the attack on Israel follows, as Kayleigh was pointing out, Israeli forces moving into southern Lebanon in an escalation of their own campaign against Tehran-backed Hezbollah. Dan, what's the latest on the ground?
Israel has now formally, publicly moved ground forces on a fairly large scale into southern Lebanon. while at the same time revealing to the world that since November of last year, it has been conducting dozens of small-scale commando operations across that very border in order to prepare for what we've seen in the last hours, in order to collect intelligence, in order to detect and dismantle Hezbollah position and see weaponry that might have been used for a cross-border attack by Hezbollah, resembling the October 7th attack by Hamas on Israel from Gaza.
Dan Williams, on the move for us now. We so appreciate your time. Now, let's get a market reaction to what is a very people-focused story, geopolitical story, and then we will move on to the world of technology. Alger Portfolio Manager Ankur Crawford is with us. It's difficult to respond to breaking news on the day, but does any of this vindicate a knee-jerk reaction that we see in the markets?
For sure. I mean, look, anytime there's uncertainty, it's going to hit the market because the ramifications of a war are clearly, global, widespread, and impactful. Besides the fact that it's very sad and, the market reaction is not surprising at all.
Ankur, when you look at what the biggest point drags are on a NASDAQ benchmark, on an S&P benchmark, unsurprisingly, they are big tech. But that's largely because they are the biggest companies out there rather than they have the most exposure to any geopolitical tensions. But does that warrant a desire to pull back on any over-focus on the Magnificent Seven, for example?
I think it's clear as the market has outflows and people try and sell the market that the Mag 7 are the biggest proportion of the benchmarks and the easiest place to take capital from. So it's not surprising that they're underperforming. Does it give us any less conviction in the long term of where these businesses are going? It doesn't, and it doesn't really change that thesis.
Talk to about where these businesses are going. Today, we have Apple on the downside significantly, not just because of the market selling, but because of worries about the sales of its iPhone 16. A lot of that predicated on when it will really intertwine AI into that offering. On the flip side, Microsoft today is showing off its prowess in the area of consumer AI. What is the thesis for these names and how much we'll actually start all using the artificial intelligence they promise?
Yeah, so one thing I'd like to remind everyone is that AI burst onto the consumer scene only 22 months ago. And we are expecting this leaps and bounds. We're expecting revenue and the ROI inside of 22 months is probably the fastest expectation baked into any company for any technological revolution. And so where I think they're going is AI will be integrated with everything that we do. And today we think of it as a co-pilot. I think it's really a co-worker of where we're going to. A personal digital assistant is where the consumer AI will go. And then one has to really ask for a company like Apple, can they actually abstract you away from your phone and abstract you away from the app layer and really significantly change the business model as they go into a more personalized digital assistant type world. And what is that worth to Apple? What is that worth to a consumer? I would argue that it's significantly more than worrying about a near-term product cycle because that software-based product cycle is coming.
We have been talking about the AI impact on stocks, on revenue for 22 months, even if the consumer hasn't embraced it as much as perhaps the market wants to talk about it. Where haven't we embraced in terms of the stocks that will rally that we haven't really seen outperform yet?
Yeah, I think AI is going to go through waves. So initially we've looked at the picks and shovels. And it has been NVIDIA, the semiconductor companies, and even inside the semis, it hasn't been all semis. There have been a select few, and there's been a big bifurcation. We've seen it in a select number of industrials, those that cater to data center and the changing data center. Then we saw it in electricity. With some of these nuclear plays and the utilities, and them catching on fire. And so, I believe the next phase of this is going to come in the rest of the data center, and also those companies that show that by using AI, they're in fact improving their operating margins. And that's the next phase. Now, I expect that to come in, 25 to 26, because still deploying this AI is not necessarily, flipping on a switch. It takes some planning.
AI is, of course, disrupting many a vertical. We think of how it's going to be applied to healthcare. We think of how it's going to be applied to finance. I go back to our top story of the day and geopolitical tensions. How much will it be applied to defense? And is that an area that you've been thinking would be outperforming, not only in a geopolitical instance, but also from an AI backing?
Yeah, it absolutely will. The amount of money that will be required to shore up our defenses and that will be spent on defense is going to be significant. And in part because, just like the Industrial Revolution in the late 1700s kind of changed the geopolitical landscape for England at that point in time, I believe that AI is going to change the geopolitical landscape for whichever countries actually wholeheartedly adopt it and then also become leaders in it. And that can set the chessboard for the next 50 years.
Anka, it's been wonderful to have you in the studio today. We appreciate you going across the whole gamut of breaking news. Anka Crawford, Alger Portfolio Manager. Now, Taiwan closing its $2.5 trillion stock market as super typhoon Kraithan approaches the island with strong winds and heavy rain. Now, the market will not conduct securities, currency or fixed income trading on Wednesday, according to statements from its exchanges. Traders are watching for any possible disruption from the typhoon, which is likely to hit the west coast, home to Taiwan's heavy industry, manufacturing, including, of course, a plant made by chip-making giant TSMC. EchoStar announced yesterday that it's selling its video distribution business to DirecTV, a merger that the satellite providers have flirted with for almost 2 decades. We caught up with EchoStar CEO Hyde Akavan. Here's what he had to say.
The founders was that this business ends up in great hands and continue to develop according to their lifelong work and vision to make it one of the greatest companies they can make. And the combination of the two companies now will be that company, the company that is unique in its position in the marketplace. So it's bittersweet. Yes. In a way they see it in great hands. They're coming together and being that challenger that Charlie has created over time. But it's also letting it go. It's also very difficult. So the answer is bittersweet, not really obvious.
But satellite TV is ultimately in a state of decline. Will this be a period of managed decline for the bigger company now?
It certainly is part of the thesis that, right now this is not at the time that it used to be 10 or 15 years ago when the, position of these two companies that are coming together was unique and was very strong. The two companies have lost 60% of their subscribers over the past, since 2016, they've lost that. Everyone has access to broadband today, whether it be terrestrial or through satellite, Starlink, the direct-to-consumer digital providers, programmers going around these two companies are 10 to 20 times larger in terms of customer base. So it is time for these companies to come together to increase their sustainability and ability to negotiate better deals that they can pass on to the consumers.
That was EchoStar CEO Hyde Akavan. Now let's continue this pay TV merger. And we're joined by, who EchoStar sold Dish to, DirecTV. The CEO now joins us, Bill Morrow. Bill, welcome to the show. And I ask you this now strategy going forward, the combined 19 million subscribers you now have, what do you offer them? Is it managed decline?
Well, thanks, Caroline. And actually, we're going to offer them something that the new kind of competition cannot. You think about the volume of direct-to-consumer subscription-type services. These are the Netflix, Amazon Primes, the HBO Maxes that are out there. They have a very narrow scope of the content that they offer, the way in which they can only navigate through their platforms. Consumers are left with having to pick and choose multiple subscription services and manage this on their own. They're having the difficulty now to navigate across these different platforms. What the new company with DirecTV and Dish will do is, number one, it will actually bundle all of those different services together. We'll still have a form of linear or time of day type programming, but we're going to let the consumer pick and choose 2 or 3 or 4, if that's what they want, of these other direct-to-consumer programs. We'll wrap a user interface around that. We'll make navigation easy. We'll make search and recommendation easy. But equally as important, Caroline, is that the combined entity with the just under 20 million subscribers will give us the very needed influence on the industry to work with the programmers to say the days of the past of 250 channels are gone.
Yeah.
Consumers don't want to pay for content that they are never going to watch. And the programmers are still kind of tied to those old carriage agreements. This influence is going to change that. It is in the interest of the consumers. We think it's in the interest of the programmers in the long run, and of course to our company as well.
Bill, I can see how you offer from a price perspective, and I can also see how ultimately this is about slimming down costs. But what about growth? Do you think you will ever increase that number of subscribers, or is it about just serving the ones you have?
No, well, Caroline, we've really studied the market on what are the pain points of the current environment that consumers feel. And again, having to manage multiple subscriptions, not knowing where your content is, even the biggest search engines that can't keep up when you're looking for a particular season or episode of your favorite series or a movie that you want to watch. We know that the consumers need more than what's available today. By combining these two companies, having the influence to be able to change those carriage agreements, we're going to give them thinner linear bundles of genres that they can pick. We'll let them add in and insert in the SVOD or those direct-to-consumer Netflix or Amazon Prime type services. And again, with a very different kind of experience. That will allow us to get back into a growth situation. Now, we need the two companies to come together because we are falling fast. You've heard this from a number of different industry experts. So this buys us some time, gives us the influence to shape the industry. That's all about the consumer, and it's going to give something to them that they haven't had.
But do we need more streaming? I know that you're thinking about DirecTV Stream and Dish TV, and ultimately, it sounds like we're going back to the past by rebundling the things we've already snipped in terms of the cord.
No, that bundled past is not going to serve us going into the future, and that's why we believe with the new kind of carriage agreements, it's going to allow you, the rest of the consumers, the rest of your viewers, to pick and choose the genres of their choice and not pay for all the rest of it. So it's not as big of a bundle as what we've seen in the past, and that's what we've been advocating. That was the deal that we struck with Disney. We fought so hard for to be able to let the consumers pick what they want to watch and not force them to pay for stuff that they'll never tune into, and that is our future.
You have other stakeholders, largely private equity now when it comes to TPG, but also the creditors. And a lot of this is based upon whether or not the bondholders of Dish in particular sign up to this. Do you think that will go through? How painful is it to take those sorts of haircuts?
Well, we think the current bondholders of the DBS business under EchoStar with Dish are going to have a better deal by converting and exchanging into the debt that we're offering. We think it'll be better leverage ratios than what they see today. There's better confidence in terms of this business model about looking forward into the future without the risk that they might perceive today with that DBS business. We also have advocated and explained that while our initial leverage ratio will be in the 2.5 times, that still is better than any other pay TV provider that is out in the marketplace today. And within a 12 to 24 month window, we're going to be very focused on bringing that leverage ratio down to below 2. So that's the reason that we believe they're interested in making this exchange, lowering that debt, making sure that this M&A deal can happen. And then we, of course, proceed to the FCC and the DOJ for the needed regulatory approvals.
We'd like to keep in touch as you go through those approvals. DirecTV CEO Bill Morrow, we really appreciate your time. Now let's get back to the markets, which are under a significant pressure from geopolitical news today, of course. We're off by 1.3% on the S&P 500. It's a large move, but actually the largest since September the 6th. We have seen this element of volatility prior to this. Nasdaq 100 off by more than 2% though, so big tech feeling the most pain. Money moves into Brent crude, money moves into the haven that is the US 10-year. We'll keep you up to speed with the moves between Iran and Israel. This is Bloomberg Technology. Quick check on SoftBank's ADRs, because those Equity-like instruments that are trading here in the United States off by 0.8%, but they had been rising, and in fact they closed more than 3% higher in Japan trading after the information reported that the firm's Vision Fund plans to invest $500 million in OpenAI, citing a source. This is, of course, as OpenAI is kicking off its Developers Day today. Bloomberg's Rachel Metz is busy. Tell us a little bit more about the investment round, where we stand in terms of the $6.5 billion raise.
Yeah, so it is our understanding that that should be closing soon. I mean, typically it takes some time for these rounds to close. I would expect it to close, in the probably, I don't know, soon, in the next few days, perhaps.
Okay, a keen eye on what's happening in the private markets. In public, they go to their developers today. It will be live streamed. What are we going to expect coming for developers from OpenAI?
So this is going to be a really different kind of developer day than what they held last year. Last year was the first one, so it was a big splashy day, cool snacks and stickers, cool stuff like that, and it was in San Francisco. At this point, they actually have a lot of developers. They have 3 million developers around the world, and they decided to turn this into 3 events, and sadly for people like us, it is closed to the media, but they're going to have an event in San Francisco today, and then they're going to have another one in London and another one in Singapore. Since they have so many developers around the world, they said they want to focus on meeting in smaller groups with these people and also just communicating with them and tailoring some of their API type stuff to them.
Very briefly, what is the most exciting area developers have been leaning into with OpenAI?
The company actually at this point has a really wide range of software available to developers. So it's a little bit hard to say what specifically they may want to use. I mean, the company has things for content moderation, and it has in the past had things that like it offers, all kinds of chat related things. So it really just kind of depends what you're building, if you want it for you inside of your company, if you want to build it for consumers. So there's a lot of options there.
Rachel Metz. We're excited to see what you bring us a bit later. We appreciate the time. Meanwhile, some breaking news. This coming from Samsung, going to cut thousands of jobs as part of a worldwide layoff. Once again, Samsung, of course, the juggernaut when it comes to chip making, when it comes to hardware within phones. Currently, of course, televisions, you name it, electronics giant, currently saying that it will be cutting thousands of jobs as part of worldwide layoffs. We'll bring you more context. This is Bloomberg Technology. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York. We get back to these markets because we have the breaking geopolitical news that the US has indications that Iran is preparing to imminently launch a ballistic missile attack against Israel. This all according to a senior White House official. We see the move and flight to safety, as we like to call it, a 10-year yield currently at 3.72. We're down some 6 basis points. S&P 500 off by percentage points. Similar moves to the NASDAQ 100. So equities under pressure, particularly big tech, as they are the biggest points movers. They are the largest market capitalizations. Brent crude, they're up more than 4%. Let's weave into some of the technology names we need to keep an eye on. Ryan Blastelica is with us for more. And more broadly, this is a key risk aversion trade today.
Yes, absolutely. We are seeing pretty broad-based weakness across equities, but certainly tech, especially since this is a group that has done pretty well this year. It seems like they are taking some of the initial profit taking here, some of the bigger moves. Companies like Apple, Nvidia, chip makers broadly, all of these are stocks that have been taking a bit of a drop today on the geopolitical risk and the kind of increased uncertainty surrounding that.
There are individual names that we want to call out because, well, there's the mood music and then there's the micro news with Apple falling, for example, significantly. This on the back of, once again, anxieties around the iPhone 16 sales. Who's been cutting back on that particular name? Where are you worried about in the supply chain as well?
Yeah, so there's been a lot of concern about Apple, just a lot of focus on the upcoming iPhone, which is the one that's going to have AI features. They're getting some early reads on demand if you're looking at pre-orders and lead times and things like that. And today we had Barclays come out and kind of, it was the latest firm to kind of say maybe demand here isn't as strong as people were kind of hoping or expecting. There was a lot of optimism built around the idea that the AI iPhone was going to lead to this big upgrade super cycle. People still kind of expect a pretty strong growth out of the AI iPhone over the longer term, but maybe this is going to be more of a 2025 story than a 2024 story. Citi also came out today. They're lowering their iPhone unit forecast for this year, but raising them for next year, kind of saying once the AI features are available, then we might see more people looking to upgrade them. But for the moment, given how much Apple has been up since April, it seems like this is a name that people are taking some profits in, especially when you have this sort of additional question mark, both the geopolitical risk, but also the iPhone pre-order sales.
Ryan, pushing us forward, when we see these sorts of snap moves, Apple is an ongoing narrative, but more broadly in the market today, do you expect people, I hate to use the turn of phrase, but buy the dip?
That's a great question, and one thing I've heard is that people kind of look at big tech as a more defensive place in the markets. It's not a traditional defensive sector, but given strong cash flows, pretty durable earnings growth, pretty good revenue growth, pretty positive demand tailwinds, especially when you consider interest in AI and so forth. People have been always looking to big tech as a area to go into in periods of heightened uncertainty. They have some safe harbor sort of characteristics, although there are some concerns about valuations given how much they moved up this year. It would not surprise me if you did see people, looking around saying there's a lot of uncertainty right now. Tech looks like a place of relative certainty, and they're willing to pay up for that.
We see the S&P 500 just bouncing off its lows. Ryan Vlesdelica, thank you. Now, let's bring in Bloomberg's Mike Shepard now on the latest news when we are understanding the U.S., Mike, is actively supporting preparations to defend Israel against any possible attack from Iran. Can you bring us the latest from Washington?
Yes, Caroline, it's all happening very fast here today. We saw mid this morning a warning from the White House that Iran was making preparations to retaliate against Israel with a ballistic missile attack that could be imminent. Now, in a way, this is reminiscent of the kind of warning that we saw in 2022 in February, when the U.S. was warning that Russia was preparing to invade Ukraine. So the U.S. is sharing some of the intelligence and some of the information that it is seeing out there in the world, and that typically in the past has kept secret, that it's kept under wraps for the sake of sharing with governments. But it is trying to show that Tehran, we are watching your next move, and we are also making preparations to defend Israel, which is one of the closest U.S. allies in the Mideast.
The key to de-escalate, not see an escalation, but that feeling likely right now?
Well, the U.S. has been calling for de-escalation and trying to push Israel and Hamas, another Iran-backed terrorist group, and Hezbollah as well, to try to meet, to de-escalate, to defuse this latest round of violence. But it has been moving very quickly, and neither side, neither Israel nor the Iran-backed groups, are showing any sign of being willing to go to the table to try to talk this out. And in fact, overnight, we saw Israel moving forces into southern Lebanon, ground troops into southern Lebanon, to conduct what it called limited ground operations. Yeah. So we may be in here for a bit, and the U.S. is concerned Israel may be overreaching.
Mike, we are the Bloomberg Technology Show, and often we associate Israel with its technology prowess. How are we seeing that industry affected? Is it far too soon to be talking about that in this current instance?
Well, it's a great question, Caroline, because we see the economic impact of conflict in the war in Ukraine. We've seen the economic fallout from that, and there is economic fallout here. It's early to tell whether businesses are really thinking about whether Israel is a good place to be. But for the tech sector, Israel is a significant player. The Israeli Innovation Authority says that it accounts for as much as 20% of the nation's economy. Israel has a reputation for being an incubator of startups, especially in the cybersecurity and fintech areas. So we'll want to see how they assess what happens next with Iran over the next few days and weeks and months, and to see whether stability has an impact on their operations.
Bloomberg's Mike Shepard, we thank you. And look, let's keep talking about other economic news. Here in the United States, the fallout from dock workers walking out of every major port on the U.S. East and Gulf coasts for the first time in nearly 50 years. It's affecting 36 ports, which have the combined capacity to handle as much as half of all U.S. trade volumes. Bloomberg's Danny Berger joins us now from New Jersey, and the latest is a pushback against automation and a desire for higher wages here, Danny.
That's right, Caroline. At the moment, what we know of what's being offered, the two sides are starting to move. They are starting to come closer together. So talks are ongoing. Still, they have not met in the middle. So the details of which, yes, you said wages. The most recent wage offer from the employers of the dock workers, that is the USMX, the United States Marine Association, late last night, they said that they were offering a 50% wage increase. Reports suggest that the dock workers themselves are now looking for a 61.5% wage increase. That's coming down from 77. So they are inching closer. But Caroline, you are so right. One of the last sticking points is still automation. In their update last night, when they offered that 50% wage increase, the employers said that they would keep the current language in the contract about automation. Now, the current contract basically prevents them from expanding any automation. There's a question as to whether that's going to be enough for the dock workers. Part of the disagreement started this past summer when it seemed like a port in Alabama was indeed starting to use more automation, and the dock workers said, hey, that's violating our contract. We don't want more automation for fear that it's going to lose their job. So yes, Caroline, they're starting to inch closer together when it comes to the pay number, but is that current language about automation enough? That is still a question.
And to that point, we saw these issues, these disputes on the West Coast. We've seen them in other industries, whether it comes to a pushback against AI in Hollywood. How ultimately do we see the contracts change? Do we see an ability to stop technology moving forward?
The employers of these dock workers would argue no, Caroline, that it's inevitable. In fact, most docks use this automated technology. You could argue that the East Coast is behind in this regard. You have both Asia and the main ports in Amsterdam. They use the automated technology. Now, a lot of the employers would point to the fact that they still have dock workers there. They're just simply doing different jobs. Instead of loading and offloading cargo, they are just working in an office remotely. But again, the dock workers might argue, Caroline, that's all well and good, but you need guarantees. You need to make sure that people aren't losing their job and that upskilling is taking place, that there are proper measures put in place that the folks who are currently working can adapt to this new reality. By the way, there's studies that show maybe even automation doesn't necessarily speed things up. It's not a clear-cut thing. So at the moment, they still seem to be at loggerheads, and you know, it's technology, it marches forward. It might be a hard tide to put back out to shore.
Danny Berger, we appreciate you. Thank you. Coming up, Microsoft is out with new features to its Copilot AI assistant. More on that next. This is Bloomberg Technology. Microsoft, it's adding voice and vision features to its consumer-focused AI assistant. This in a bid to really demonstrate a payoff from a pretty huge investment in artificial intelligence. Bloomberg's Dina Bass joins us for more. And Dina, you've seen it, you've written about it. What most excites you about the updates?
So, look, the things that we're seeing that are most new are really in the form of an update to the Copilot consumer app, which is going to start rolling out today there's an iOS version, there's an Android version. They're also starting to try out a WhatsApp version, which is new for them. And one of the more interesting things that they're adding are vision features that attempt to have the AI know what you're looking at when you're looking at a web page, and then suggest other things you might want to do, next steps, answer questions, things like that. It's an interesting concept, but also a tricky one, because you have to figure out how to do that while maintaining privacy, while maintaining safety. And so what they're doing in the preview version they're putting out today is a bit limited. It's only for certain websites. It's not going to save your data once you shut down the app, things like that. But in this feature and in general, what they're going to have to balance is AI that attracts consumer interest by being more personal, by being more what a user wants, while at the same time not creeping people out, not violating their privacy. I talked a little bit to Microsoft's consumer AI chief, Mustafa Suleyman, about this. And, you know, what he really wants in order to attract consumers is kind of more emotional, more of an emotional connection. But again, that's a balance.
Dina Bass sets us up perfectly. We thank you, because we can talk about this a little bit more with Yusuf Mehdi. He's Executive Vice President and Consumer Chief Marketing Officer at Microsoft. That balance is hard. How do you not freak people out with how good it is?
Yeah, absolutely. I think the That's one of the interesting things about technology now is how we shape it. It's changing quite a bit from something that was just sort of ones and zeros and answers to now an ongoing conversation with Copilot, your AI companion, where it can help you and support you throughout your entire day across almost anything that you're working on.
Okay, so the enhancements from a vision, from a voice perspective, am I going to feel like I'm talking to an agent? Am I going to be able to outsource my day?
Yeah, I think we're really moving from what I think of as an AI tool to an AI companion. And a companion in the sense that you trust it, you feel it's more personal. And when you speak to it with the new Copilot voice that we're announcing today, it's so fast, it's very fluent. You can interrupt it. This is not like the old, hey Alexa, hey Siri, and you have to wait. This is literally you talk to it and it will have a sense of warmth and a sense of your energy and personality. So it'll match that to you. So if you're nervous about a big trip or about a presentation, it'll coach you through. If you're excited about, a kid's birthday party, but you need some ideas, it'll help you. So that kind of voice and that fluency will really change how you use AI.
Are more people actually using the tools you're building them?
Yeah, we've seen a lot. So we've seen, millions and millions of people now every day slowly using it for more examples, for more questions. And that's in fact what goes into how we build the product. But I think what we're announcing today with voice and vision is going to be that unlock that's going to make it a novelty to something that's mainstream that we use every day.
But I'm kind of being promised an unlock everywhere, whether I'm going to just easily integrate it into my Apple iPhone, whether I can just go to WhatsApp and easily use Meta AI, whether I'm looking at a whole new app and having to download ChatGPT and use it. Why use your version? What is it like in terms of competing for consumer time?
Yeah, no, it's a great point, and our time's so busy. I think the difference will be in what's getting announced today is, first off, you have an AI model that's so much faster, and it really, as I said, it understands you and it connects with you in a more human way. The second thing, the voice, the convenience of it. It's one thing if you say, hey, we all learned Spanish in high school. We're kind of proficient, but we're not fluent. This is fluent, where it can think and it can act for you if you give it some points and tips, and that will really change, I think, the use case for it.
But why your version rather than OpenAI, which is sort of the underpinning of the technological advancements you're making?
Yeah, I mean, there are many great offerings out there. What makes ours unique is we tune it a little bit so that it, as I said, it's going to be much more personal, much more convenient. We also weave it into all the software you use. So whether it's Outlook, and in particular on Windows, we announced a new class of PCs we call Copilot Plus PCs, where it's the most advanced AI on it. So you can do things like now search your PC with common language, which seems like you would have solved.
And are people buying those PCs because of the AI component?
They are. They're buying them because they're the fastest PCs out there now. We took the high ground back from a MacBook, and because of the most advanced AI. And what can you do with that AI? Your photos can now go to high res. You can search for anything on your device. You can recall anything you've ever seen on the device, which is a tough thing. And a new feature today we call click to do. If you see something like even on a YouTube video, you can click and say, tell me more about that. Maybe I want to buy that. These are really powerful features.
Dina just mentioned it, but she spoke to Mustafa Suleyman, relatively new at your organization, AI CEO. How is that changing the way in which Microsoft presents to the consumer?
Yeah, one of the great things about Mustafa is he really has this sort of deep history, obviously with AI, incredible expertise, but also the consumer ethos. And so he's helping, change the company in terms of how we shape, how we build products even, so that you really, it's kind of an interactive way that you work products. They're not like products we used to build in the past that were like ones and zeros, calculate this number. It's really how do you, engage with a consumer with an AI where you can bring them out, you can prompt with questions, you can guide, and we have to learn on that. He's bringing that great expertise to the company.
And you've got to go and market it.
Yeah.
We thank you.
Thank you.
Yusuf Mehdi, Executive Vice President and Consumer Chief Marketing Officer at Microsoft. Cerebras, it's an AI startup taking on NVIDIA and has filed for an IPO at a valuation of as high as $8 billion, according to Bloomberg estimates. We want to discuss it all with Bloomberg's Amy Orr. What's interesting is the financials they've disclosed. It's how dependent they are on one particular customer.
Yeah, definitely. So G42 is an Abu Dhabi AI company that has accounted for 87%, which is actually 4 percentage points higher than last year. And it's interesting to understand that G42 is a company that is closely watched by the Department of Security. So it's interesting that it's not only about the company's the sales revenue, but also it is also an investor in the company that That's why it's very watched. Whether investors will really take that to heart is really to be seen.
Why go public when sales are currently only at $136 million? Why not wait, beef up even further?
So AI chip making is at a very interesting point in time, and it's actually burning a lot of cash. So it needs a lot of money to actually put into development at this point. So it's understandable that it will actually come for cash. Obviously, a lot of tech companies want to actually make some kind of revenue, be profitable before coming. But the fact that this company, Cerebras, is competing with NVIDIA, which has actually had a really great run. And even despite the August 5th kind of pullback, it's come back up again. So the valuation right now is actually pretty good, and also is what everyone is looking for.
Amy Orr, keeping a close eye on that IPO. Meanwhile, let's check back on those public markets. The Nasdaq 100 lower. Investors seeking out some safe havens right now amid growing geopolitical risks. Isabel Lee is here with us. Big tech falls the hardest because they are the most valuable companies out there, it feels like.
Definitely. I mean, we also have company-specific news today, from Apple to NVIDIA, but S&P 500 is now down by more than 1%, NASDAQ almost 2%, and treasuries across the curve fell. And to your point, investors are flocking to safe haven assets like gold. Bitcoin, I know this show loves Bitcoin, it's also down, and it's back below the 61,000 level. We have gold climbing to 2,600, and a gauge of the US dollar strengthened. So a lot of news really to digest here, and we also have earlier this morning a mixed bag of economic data. We have US ISM price falling by the most since May 2023, and that's as US job openings rose in August. So those two are kind of at odds, with a lot of data indicating that the demand for workers is slowing. And on top of that, Caroline, we also have dock workers on strike, affecting almost 36 ports. So there's really been a lot of swift in just one day. Yesterday, Monday, the S&P 500 hit its 43rd record, and today you're seeing everything sinking. So really,
but that is the context, right? Yes, we've got Apple down more than 3%, and there's some micro news around the iPhone 16 concerns there. But actually, we're falling only the most since September the 6th. This is a key concern, a potential imminent threat from Iran to Israel. But actually, the knee-jerk reaction is relatively limited, would you say?
Exactly, because these companies are so big, but also the rally has been broadening. So they're not so much as macro events anymore. NVIDIA earnings, Apple earnings, or even just corporate news, they're not as big of a deal because the rally is broadening. A lot of these stocks are gaining more heft, and geopolitical conflicts and crises are really center stage right now, more than big tech. So for now, they're away from the spotlight, and it's other issues now, unfortunately.
And where people buy defense stocks. We talk a lot about AI, the implications within defense, but that does seem to be an area of equity outperformance on the day, unsurprisingly.
Defense stocks is outperforming, and also other stocks related to AI, like industrials or energy. So the AI luster is broadening to its other peers, so it's really just not the only game in town. But you're right, we're seeing that rally. Gains are broadening, and who knows how the day will end. This is just one tweet. It started out, and then it's just domino from there.
NVIDIA currently off by 3.5%, of course, with its ultimate market capitalization. That is a huge move for the rest of the benchmark. Bloomberg's Isabel Lee, we really appreciate the market wrap. Now, that does it for this edition of Bloomberg Technology. Do not forget to check out our podcast. You can find it on the terminal as well as online on Apple, Spotify, and iHeart. This is Bloomberg Technology.